Hello. Okay. Greetings to fellow traders. Firstly, I would like to thank you for coming into this room. The agenda we are going to talk today is about taking full advantage of precise trading zones. Okay. Basically, what we do is we concentrate on about 37 crosses, right? And this session will be basically we would be taking live trading session. Of course, if there is a signal, we will take live trades. If there isn't any signal, we can also use the session to discuss on any particular crosses which you are interested in, right? And do take note that whatever you do, this is purely education. And do take note that you have to stick to the rules and your limits. Okay, and also the trades we will be taking, we will be giving you the entry, exit, and stop loss, right? So let's see today's market condition. US is not back from the holidays. So as a result, most of the markets are pretty quiet. But in fact, the cable crosses have started to move this morning. The strongest cross now is the cable pound, and the weakest is Aussie, right? And also the Sing dollars is also pretty strong, but it has not moved out of that zone 1 level. So if you notice on this net change, pound is the only cross that has moved about 60 pips away, and the rest of the crosses all are trading within the zone 1, which is pretty flat. So the signals which we would be looking is, you can long either pound Aussie or pound New Zealand, which is already like about 100 pips, and I'll show you along where to take entry and where to put stop loss and what is the least risk with the best reward, right? And for those of you who feel that you also want to short cable, please be extra cautious because it's been quite strong. So you would be either you'll be caught or your entry has to be pretty precise because you have to have with the best, because you will be trading against the trend, right? Let's look at the pound Aussie, right? The pound Aussie wise. In the meantime, if you have any questions, please type in. I'll go through the sessions towards the end of the session. Okay. Let's give me a minute. Okay, the pound Aussie, in fact, the resistance zone 1 is, which is 176.85, and the support zone 1 is 76.05. So if you notice right now, it is trading at 177.45, right? And it has still got more room to go up, which is in about 178 figure, right? So what we will be looking at is, okay, let's look at this chart. Okay, if you look at this, this is a 2-hour chart on the pound Aussie. It has already breached the previous high, which is 177.45, which is it is just trying to breach that level, right? So in fact, if you notice this market, this is RSI, which has got also more room to go higher. So as a result, what I would suggest is try to buy on dips, right, rather than you go on short. So the levels to look for a long opportunity is about 177 figure. This is where you can look to long, right? And do take note that whatever the levels we are discussing, okay, try to have a plus minus 5 pips variance, because different brokerage firm will have a different spread. So sometimes when you key in the order, your order may not be filled. Or you might miss the price, entry price, but yet your profit target is met. The trading can be very frustrating when two things happen. When you are right in the market, that means assuming that you predicted the market in a correct direction, but you put in the order, but your order was missed, and that can be a pretty frustrating. Another thing is when you put a stop loss, sometimes your stop loss can be triggered. Okay, give me a minute. Yeah, okay. Your stop loss can be triggered and the market moves in your direction, right? So these are the two things, can one of the most frustrating incident you can have it on trading. But try to, as you go on, you use it quite often, then you know where to adjust your stop and how we can go about making money, right? So let's see. I'll give you this trading tips. Just see, yeah. Show you the other screen. Okay, we are looking to buy pound Aussie. Okay, this is a limit buy. Okay, we want to buy at 177 figure. Okay, the stop loss is about 40 pips. We put 147,660 and 177.50 is our entry point. So this is now, right now, no doubt it's trading at 147.40. So we are looking to buy on dips, like we are waiting because the price is about to reach its resistance. So what will happen is you get to have a pullback whereby you can enter. See what is so special. See, I do not know what kind of trading strategies you apply, because sometimes what is best to take trades on specific levels, because rather than entering market orders, because I do not know how many of you have come across that when you take a trade, then the moment you took a trade, the market moves against you, then the price, the moment the market moves against you, then you start to panic, especially if you use a very nominal stop loss. But when you take on specific entry levels, see what happens is most of the time either you would be taking the trade at a precise level, or you might be missing that entry. So but that's where you need to sit in front of screen. Sometimes you feel that the price has missed, but the market started to turn up, straight away you can take a trade. So that's a difficult part in trading, which you need to get used to it. But as we go on, I think we would more or less stick to that trading strategies which we are trying to guide you along. Another trade which we are looking at is another possibility trade is, which is also we are trying to long pound New Zealand, right? As I told you, the pound is pretty strong, and it is the Aussie is in fact very weak, but New Zealand is also getting weak, right, against other crosses. So what we are looking to is right now, this is let me see, what is it trading now? Okay, pound New Zealand is already like 222.15. Okay, 222.15, which is 221022, right? So on this scenario, okay, it has also got more room to go up. If I show you on a 2-hour chart, okay, you can see that the price again, it has started to break the previous high. So I feel it is still got more room to go higher. So what we will be doing is, again, we try to buy on dips. So the levels, sorry, I show the chart. Give me a minute. Sorry. Okay, here, back again. This, if you notice this pound New Zealand, right? It is starting to break the previous high, right? And we feel that it has still got more room to go up. So what we would be doing is, we would be looking to buy on dips. And for today, I think the pound New Zealand should be pretty strong. And so anything near 221.70.80 level. That means, again, this we look at another 40 pips, 40-50 pips down, right? So look to buy on this market again with another 40 to 50 pips and a profit target. So back to this screen. So again, we look to buy at 221.70. Stop loss. You see, this instrument, the tricky part of this is because the spreads are usually quite large. Most brokerage firms, they charge a spread of about, I think, about 10, at least 10 to 15 pips spread. So if you want to trade on this instrument, what I would suggest is you use at least 50 pip stop. But of course, your reward can be pretty high, because on this, the market, it can be moving pretty high. So here, our exit point would be about 265, right? So which is, it can give you about 80 to 90 pips reward. So usually, if you look at this, you know, when you can any trade, when you trade, it's worth taking trade when the risk reward is at least 1:1, or at least 1:1.5, or 1:2. So try to have some rewards, right? You know, like especially, you know, like I do not know, you know, if you're a forex trader, I suggest it's best to have risk reward strategy, meaning in the sense, when you take a trade, you must know in the event if you're stopped out how much you tend to lose, and in the event, you know, you make profit, how much you make. So it is best to have a profit target, entry, exit, all the three stops. When you do that, your emotions would be at bay, because I do not know how many of you just blindly take a trade without having your target in mind, or even your stop loss, or because this on this way you would not make a disciplined trader, right? So try to have a specific strategy for you to take trades, so that it will be good, and it will have put your emotions at bay, right? So, and any other crosses, if you can also even pound US. If you look at it again, we can also look to buy pound US, because try to do all the pound crosses, like as I told you, pound is being the strongest cross. So pound US is, let me see, what is it trading now? Okay, right now it's trading at 164.08, right? So what we will do is we'll go back to the chart. Okay, in fact, this pound US, if you look at it again, it has been a high, coming up pretty high. So if you see this, right now is approaching this channel, okay, on this 2-hour chart, right? So the chances are, you know, once this channel gives way, the price should be going up, right? Again, if you look at your RSI is already like approach, it's already reached overbought, but still I think, you know, it's got more room to go higher. So what we will do is we will try to pull buy on dips or pull back, right? So the levels which we are looking to buy at is about close to 163.70, 80 level, right? So this is where we should be looking to long, with a stop loss. If you notice, the low is 163.30, right? So about, I think it gives you about 40 to 50 pips risk. And of course, the reward, what we believe is it has got a potential to go as high as 165 figure, right? So this, on this scenario, we again, we look to do a limit buy at 163, maybe put at 75, right? I told you it's about 80. So we'll try to look at plus minus 5 pips. Again, you know, for those of you who are trading pound, if you are in front of the screen, if it really makes dips around that level, I think you can look to buy. Again, your profit target, you can say about 50 pips, which is 164.25 or 30 level. And if you feel that the price has not reached the 163.80, you can also, on this specific instrument, you can also buy on the break. That means once it breaks 164.25, the price should go higher. So when you do that, your stop loss can be about 30 pips again, which is below that low, because right now the market is doing a consolidating. So let's see how far it goes. So you can also, on this trade instrument, you can trade two ways. One is buy on dips. If you don't get that price, then what I would suggest is once it breaks the high, then you can buy on the break with the low as your stop, because I do not know how far it's going to stop. So you can put a stop and you can exit at 40-50 pips exit, because what I feel is for today, this instrument has got a tendency or potential to go near 165 figure, which is we have another 100 pips move. So especially if you are bearish, try not to do anything now, because the market is pretty strong, because it's pound is quite strong against in fact almost all the majors, all the crosses. So try not to do shorts, because if you get short, that means you are trading against the trend, right? So what we'll do is, I mean, these are the three trades which we would be looking for today, right? And if you have any questions, feel free to ask. If you want to discuss on any particular instruments, we can discuss, because try to have as interactive as possible, because this session you can ask as all the 37 crosses pertaining to all these crosses. We will be very glad to answer your questions, right? The question is that both are similar patterns? Yeah. See, when I think early on when we talked about the pound Aussie and pound New Zealand, okay, both, in fact, let me go and show you the chart. See, if you notice this is a 2-hour chart, and this is a pound Aussie, right? And this is the pound New Zealand, which is also similar. Okay, the reason being is because you see both are commodity currency, and most of the time you see this Aussie and New Zealand moving in the same direction, right? So that as a result, you see both are in the same directions, and especially when you see this kind of pattern, your trading can be in a very comfort zone, because you know that you are not doing against the trend or against the market. So you are with the market. So that would also give you an extra confidence in your trading pattern. See, I know that many of you are trading only on majors, because see, nowadays you should understand or accept the fact that trading is not an easy game like 10-15 years ago. 10-15 years ago, in fact, that the information was not readily available. You know, when I used to trade 10-15 years ago, I used to have a Reuters terminal whereby I need to use it to look at the chart and take my trading decisions. But nowadays, you know, the informations are readily available, and it's, in fact, most of the information you can get it for free. And as a result, you know, trading becomes more and more complex. And also, you know, if you are looking at only on the majors, the chances are, you know, you might be really looking for maybe 1 or 2 good signals a week. When I said good signals, means real good signals for you to see, you know, the market is moving. See, now if you notice, only today, like, pound is only moving. So if you take a trade on the euro, okay, maybe I'll show you the chart on the euro USD. Okay, I show you on the 5-minute chart. See, the euro USD has been moving down, right? So you must need to be pretty smart, because you need to know which market is moving. At least you can stay in the market and you can stay in the business most of the time, right? So if you long euro, the chances are, I'm not saying you will not be making money, but the chances are your rewards would be much more less than if you trade pound at this scenario, right? So this is what I would suggest is best for you to pay attention, because every day, every hour, in fact, every hour, if you take different crosses will take its limelight, meaning in the sense, you know, different cross would be moving very strong or very weak, you know, on in fact, every 2-3 hours, the market moves in that direction. And of course, for the day, is if you see that the one particular cross is strong on the whole day, then you try not to get on that against the trend, because when you do that, chances are, you know, either you'll be getting stopped out, or you would be get caught on that market, right? The next question is, would you consider any counter trend moves on pound pair? Can you try to be more specific on pound pair? Are you referring to all the pound crosses, meaning pound, New Zealand, Aussie, because I do not know which cross in specific which you look at. So it is best for you to see when you ask questions, please try to ask what time frame are you looking at and what is the currency pair. So on that basis, it will be much more easier for me to explain, because sometimes, like when you ask what is your opinion on pound, it can be three different opinions. That means in the immediate term I can be staying short, on the long term I might long, or in the medium term I might do not want to do anything. So try to be more specific on that. So you're looking at pound dollar seems to be at strong 4-hour resistance. All right. So okay, you are looking at pound US. You're looking at 4-hour chart. Okay. If you ask me about this particular cross, okay, what I feel is, okay, it is, in fact, if you look at the 4-hour chart, the price has just closed on the high, right? So there is a very strong momentum on here, but if you look on this overall, the pattern itself, okay, of course, I do not know what kind of trader you are, like, for example, like whether you are a risk taker, whether you are a conservative trader, it all depends how you interpret. So if you notice here, in fact, as I told you just earlier on, okay, for today you can see pound easily 165.05. In fact, you see this, this is 165.12. Okay, I draw a horizontal line here. See, early on I told you I see the pound hitting about 165.05, right? So in fact, if you, based on your projection, okay, if I draw the channel, okay, there is a strong resistance which is at 165.10, which is plus minus 5 pips, right? So so the chances are, it is going to go up, right? But to know that, okay, because sometimes when you take your trade decisions, you must know what is your risk and what is your reward. Like as I told you, my target point is going to be about 165.05. So what is my risk? It means in the event, if the price goes against or turns in an opposite direction, how far can I withstand the pressure? So when you look at this chart, okay, there's two levels which I would like to pay attention to. That means the first level is 163, about 55 level. And of course, if you see the low, which is 163.30, so that should be your minimum. That means maximum stop loss withstanding level. So that means if you want to long now, that maximum you have to put about 80 pips. So whether you want to take the trade is up to you, because I think in my last session I told you that, see, trading is a game played by different sportsmen with different stamina, right? So you have to know, that means the stamina, what I'm referring to is the amount of capital you have and the amount of risk you're able to withstand. So this what makes a successful trader and a trader who has not been successful. So if you know that, okay, this is my risk and this is my reward, okay, I'm prepared to take the trade, then it's up to you to decide what you want to do, right? Excuse me. Okay, the next question is, what's your opinion on dollar yen this coming week? Will it go up? Okay, again, this is dollar yen. Okay, let's see. We look at a weekly chart. Right, if you look at this weekly chart on the dollar yen, okay, if you notice, okay, I'm putting RSI and a DMI. See, this DMI is getting flat. Okay, the reason being is because right now, okay, just give me a minute. I'm not able to see the screen now. Give me a minute, huh? Okay. Sorry, my apologies on this. Okay, if you look at this, dollar yen, we are looking at a weekly chart. In fact, the DMI is pretty flat, and your RSI is, I mean, this is just the beginning of the week because yesterday was on US holiday, right? So this is the scenario is giving here. But what I feel is on the weekly chart, it's like you see, it's approaching this 89 moving average, which is the pink line. So let's see what's happening on the daily. Sorry. That was a daily. Okay. This is a weekly chart. Sorry, yeah. This is a weekly chart. So this is, in fact, for the last 2 weeks, it has been pretty down. So now this is the daily chart. So based on this daily chart, if you ask my view on the daily chart and on the hourly, all right? So what I feel is it is going to have right? So if you look at this, in fact, what I see is about 89.50 level. Okay, when it comes to this level, the chances are the price might struggle, right? And overall, if you look at on this picture itself, this is showing a head and shoulders pattern, right? It's a inverse head and shoulders pattern. So if you look at based on again on this channel, okay, this of course is see too many lines here. It should come here, then it pull back, and if when the pull back, if your neckline holds, then you can see the price coming down. So if you ask me, my view on this should on that first target, which you have to be, if you are looking for a short, what you have to do is you have to be very cautious, meaning in the sense any quick profit when it approaches 89.60 level, then you should know that you should be liquidating because you expect the price to bounce back higher. Then when it's bounced back higher, then you can look for a short. Okay, so that is my view on dollar yen for this whole week, and of course I'm using this on a 2-hour chart, right? So the next question is Aussie US. Okay, again, please try to be more specific on what time frame you're looking at, because when you look at a time frame, because I'm very happy to discuss on different time frames which you are keen in. So please be more precise on your time frame, right? So, but if you want to look at Aussie yen, I'm sorry, Aussie US. Okay, this Aussie US, if you look at it on that 2-hour chart, it is coming down, right? If you say you want to look at 30-minute chart, what I feel about this is, okay, just if you notice here, right now the price are showing on the 30-minute, it's like looking like a consolidation between from here to here, right? So in fact, when it approaches here, that 91.70 level, okay, in fact, Aussie US about 91.40 level, in fact, should be a support, right? So again, if you look at your RSI and overall today is expected to be down, right? But whatever is it, because if you notice this on the 30 minutes, in fact, from 11th, this is like for almost a week, it has been consolidating in this manner. So you should know that if you short now, when the price is approaching near this support barrier, you should be exiting. All right. So that would be the trading gap. You see, you must understand that when you trade, I have seen many people, because they are not able to maneuver according to market conditions. What do I mean by that? That means when the market is not giving any signal, then you should know that you should be staying put or staying away from that market. And when the market is giving you good signals, then you should know that you should be holding on to the trade or holding on to your profits. And when the market, you feel you are not comfortable, or when you're not very convinced on any signals, then you should go for a quick profit or fast one. So you should be able to maneuver accordingly, right? So maybe your target is 91.70, which is, I would say, you can see, which is a very good level. In fact, what I do is, in fact, I use most of the time a 2-hour chart, right? Because 2-hour chart, I feel more gives me a better picture and bigger picture. So rather than, I know different people use different time frame. So do take note that the price would struggle. That means when the price reaches at a 92.20, 2015 level, that means when it approaches this peak, the price would struggle. So what I would suggest is, if you have short, do take note that when it approaches this level, and if it struggles and turns up, then you should know that, okay, so it may not reach your target, right? So that's the thing you need to take note. But of course, if this level gives way, then definitely you can see your price 91.70 or even 91.40, 45 level, right? Okay. The next question is, could you look into Euro Pound, please? Euro Pound. Okay, this Euro Pound again. Can you tell me what time frame are you looking at? So at least I can straight away I can go to your point and tell you, right? Euro Pound. Okay, this, if you look at Euro Pound. Okay, and this is, I'm looking at on daily chart. If you see on the daily chart, every day has been a down day, because like you see almost like 3-6 days in a row, right? So based on this pattern on the 2-hour chart, right, what I see is, okay, it approaches price target. Okay, which I see the price target should be, I'll tell you where is the price which we are looking at. Okay, Euro Pound, I'll tell you, maybe I'll give you the levels so that, it will be much more easier for you to see. Okay, 80, what I'm looking at is, okay, the chances are, it is going to bottom soon. Okay, do take note that, because I wouldn't advise you to short. If you have already short, what I would suggest is start booking your profits, because if you notice, the RSI is starting to show a divergence. Of course, it can come down, right? So, but it is going to be limited. What I feel about the downside is, it's going to be kept in the level between 86.85 to 86.45. So that means I'm looking at another about 80 pips down. So if you have already holding shorts, what I would suggest is try to partially book your profits, so at least you know that, okay, this is going to turn soon. Otherwise, if you are not holding any positions, then do take to look long near. If you see 86.85 or 86.45, that's a level to consider to go long for a quick, because you should know that this has been pretty down move for quite some time, right? Okay, so I hope I answered that. The next question is pound yen. Okay, this pound yen, can you again tell me what is the time frame which you are looking at? See, look at this pound yen. What I'm looking at is, okay, right now it is moving, it's consolidating. In fact, if you say within this area, in fact, the bulls are struggling. So what I feel is the high might be capped near about 149.50 level, right? So that would be a level to be considered, about 149. 60 to 149.80 level if you want to look for a shorting opportunity. Right now, as it is just consolidating. If you look at, in fact, the DMI has just crossed. It may have some upside, but I feel that the 149.85 level would be a critical level. So, in fact, if you look for today, since pound has been pretty strong, right? So, as I told you earlier on, okay, pound has been pretty strong. In fact, it's strong against almost all the crosses. So that would give you a brief support, meaning in the sense like, okay, you can expect to go long because the price is expected to go long, but 149.50 to 149.85 is the level to be considered, because that's where you see that the bulls really, that means the bats are coming in strong, right? So that's my view on this pound yen. Okay, the next question, but it's not that EU is in support. I do not understand what you mean by that. Okay, the next question is, okay, the next one, I think I've cleared more or less. Okay, Euro USD. The next question, the Euro USD 1 hour, right? So if you are looking at Euro USD 1 hour, okay, in fact, if you look at 2 hours, it has been consolidating, right? In fact, it has been consolidating between 143.70 and the high about 144. In fact, within this barrier, right? So if you're a person, if you only trade on euros, what I would suggest, because like yesterday was on US holidays, so that's one of the reasons why you see a very narrow trading, right? So maybe after it comes, because right now, if you notice, okay, this has just been consolidating. When this happens, because of that holiday, I'm not able to tell you whether it's genuine, because holiday is a thin trading, right? So if it's in a normal trading conditions, if the pattern happens like this, then the chances are, the low has not been seen. That means, you have a one more dive before the market really bottoms. So right now, because of that holiday session, because we may not be able to say whether this is going to have one more dive or the low is already been seen, because it's still too early for us to gauge this the turn, right? So this is the view, but overall, I think what I would suggest is Euro US. Especially if you're a day trader, okay, what I would suggest is stay sideline, because the market has not given you any clear direction, because whether it has already turned up or even it is turned down, it is not clear yet. So it's best for you to wait for more clear signal, right? Okay, the next the next question, when it turns and the pound get really weak really fast, then you. I'm sorry, okay, I didn't understand this. Okay, the next is pound yen 2 hour chart. I think early on I think I did discuss on this pound yen. I told you, okay, since you are looking to pound yen, in fact, at the low, as long as that low 148, right? Right now can be a buying opportunity if you want to take trade, but I would feel very comfortable near that 148.30, and you can put a stop below. I do not know what's your risk reward, but below even this 148.05 or 147.80, that would be the best if your risk reward permits. So what I would suggest on this is try to wait, because it is going to turn up soon, and you can expect the market rising towards that 49.50 level, right? So buy on dips. That is what I feel is the best to do at this junction, right? The next question is, could you go over the settings for all your moving averages, and do you wait for crosses to determine levels? Right. Okay, moving averages, because if you feel that if you are using moving averages, the moving averages which I use is 21, 34, 55, 89, 100, 199, 360. I use different moving averages. But you must understand that when you learn to use moving averages, you must know how to use it, because see, the moving average can only be used when the price is doing a retracement or a correction or a pull down, right? So when the market is making new highs, you should ignore the moving averages signals unless you use a displaced moving average, right? So but when you use here, because basically how I do my trades is like, see, we generate the report. Okay, I can show you that maybe the sample of the report, which I can show you. This is what we do, and in fact, I take my trades all on that levels, right? Just give me a minute, I show you. Okay, basically this is what we do. We have this report. So we take our trades all on precisely at our levels. So I have a guideline. When the price breaks above that resistance zone 1, then I would go long, or when the price breaks below that support zone 1, then I'll go short. And of course, I do have different levels for me to take my entry in on pullbacks. So basically, I use this levels for my entry, and most of the time, it works very nicely, because you should know that a successful trader is working on probabilities on risk reward. So it all depends where do you enter, where do you put stop loss, and where do you exit. So I use all this because all these are numbers, and these numbers all are built in, like that means whatever you use, even like Fibonacci, Gann numbers, trend channels, whatever you are looking at is already there. So basically this is what I use, and I take my trade decisions. In fact, early on I gave you all that the levels all are based on our report levels, right? So this is one of the way whereby we use our reports and take our trades. This is very simple, because what I feel is, a successful trader must be your trading strategy must be as simple as possible, because I know in fact previously, like 5, 7, 8 years ago, when I used to trade, I used to look at moving averages. I used to look at indicators, oscillators. I used to look at so many tools. By the time I decide for me to take my trade, look, I'm ready to take my trade. By then the market would have already moved. Then I most of the time I tend to miss my moves. So in this manner, I'm able to control myself, and I know what I am doing, right? So the next question is, so you use pure price action to determine levels. What is the lowest time frame for that you use, right? In fact, you're right. Okay, I use purely on price action levels, and the entry levels. Okay, I do mostly use is 1 minute chart. Okay, I take my trading decisions on 2-hour chart, but my entry is all based on 1 minute chart. So for example, if you notice, this is a 1 minute chart which I'm looking at on that pound yen, which I told you. So right now you see this, it has been moving slowly, and it's just making lower highs and lower peaks and lower valley, right? So the moment when the 1 minute start to make higher valley and higher peaks, that's where I know that the market has already reversed or the market has turned. So that is, of course, I use my levels so that I know that, okay, I'm expecting the market to turn at that level, and when the market gives me a confirmation at that level or gives me a signal at that level, then I'm more convinced, and my confidence level is at the peak. So this is one way which you can make a consistent trading entries and exit, right? Okay, any other questions? Okay, the next question is, could you take a minute and tell us what is the most common mistake traders make? Okay, see, I'm being a trader for the last 15 years. I can tell you my experience, because see, when I used to trade, especially, the last time I lose a lot of money was during September 11, right? And what happens is, most of the traders, they make the same mistake, is because, see, whenever they take trades, See, the biggest hurdle is controlling the emotions. See, when you trade, and I think every human being nature is everyone who put in the money and open the account, everyone's prime goal is not to make that capital into negative, right? So when you make, you would be happy. Every trader, when you, especially if you are a beginner, when you ask yourself how much you want to make yourself a day, your answer would be, it can be it can vary from even like $50 to $100. See, the same thing, what you should be asking or telling yourself is, how much can you afford to lose? See, this is where most traders make mistakes, because see, they are only interested, they're only thinking like, I want to make, and I want to make so much, like I make $100, I'm happy. But when I lose, what happens is, the moment they lose 300, 400, they would like to sit on with it, sleep with it until, they can't take it. And one fine day when they decided to square their positions, that's where you see the market really reversing. So this is what happens majority of the time, because in fact, most of the traders, they get kicked out of the business because they are not able to control their emotions, and they do not have a specific game plan or strategy. You should be, you should be telling yourself, look, this is where I'm looking to long, and this is where I'm going to put my stop, and this is where I'm going to exit. So the moment when you are stopped out, when you put the stop is your protector, that's your shield that is going to protect you, right? So when you are stopped out, there's only two things you can happen. One is, you might either the price might hit your stop and the market might reverse again, which if you are really, if you know your stuff, you know that, okay, look, it's just been stopped out. Okay, I want to re-enter again to cover back your losses. So that is one way, one game plan which you can implement. The second one is, if you're stopped out and the price moves further down, let's say you're long and the price moves further down, you would be getting the price cheaper, meaning in the sense, rather than if you hold on to your trade. See, I know a lot of clients, what they do is they'd like to hold on their positions. See, when they hold on to their positions, they are not only losing on their positions, but they're also losing their opportunities, right? So you should tell your fact that, when the price is really lower, when they're already holding your positions, they do not have guts to long again or buy one more time. So as a result, they're also losing their opportunities. So holding a position when you're losing can be very painful, right? So this is something which I would like to just request you, try not to do that mistake, because see, if you're stopped out, is quite norm, right? Because at least okay, this is what I have a game plan, and this is what I've been doing, and things might turn out, in your directions at any one time. But if you do not have any specific game plan or a strategy, then chances are you are somehow or other, you tend to lose your capital, then you go back, then you come back again, you tend to lose your capital, and this is what you'll be doing, and you would not be heading anywhere, right? So just try to, this is just a humble request, and try to do that. All right. Okay. The next last question is, could you comment on 5-minute chart? 1 minute seems to be fast. How would you use 5 minutes? Do you want to talk on any specific instrument which you are interested? So it will be easier for me to discuss. Can I ask you, Mr. Hardy, can you just tell me what instrument are you looking for? At least I can show you the chart and tell you. Okay. Okay. Maybe because euro is pretty quiet, so you may not be able to see. Maybe let's look at euro pound, right? I think the one started to move. Oh, okay, 1 pound. Okay, let's say we look at pound US. See, if you look at this 5-minute chart, all right. So if I'm going to use a 5-minute chart, see, basically this is how you need to take your trade decisions, or you need to draw. See, if you draw a channel, the picture looks very clear, right? So if I draw a channel, I know that even though the price goes higher, I have a resistance or a barrier at 164, 40, 45, right? So when I draw this channel, I should know that, okay, even I buy here, I know that, okay, the price is going to struggle around here, but once it gives way, then I know that my price target, which is 165.05, should be met. So when you draw a channel, that can be a pretty useful way of guiding your price target, right? So when I look at this 5-minute chart here, so I know that this is consolidating. So I know it is going to go higher. But when you look at your RSI, okay, in fact, what I would suggest you is, if, I do not know, for those of you who feel that you do not know whether you are doing the right thing, or you get mixed up, or sometimes you get worried. See, when you look at your RSI, see, whenever your RSI is at above this overbought, right, especially on a 5-minute. So if you know that this is going to be going up, I know that, okay, I know it's going to go up, okay, it's going to go up, but it is going to be limited, because I know that, okay, it is going to be hit our price target, then it has to come down. So basically what I'm trying to tell you is, use your 5-minute and use your 1-minute to take your trade decision. See, when a 1-minute and a 5-minute, when you see a 5-minute peak forming, then you see a 1-minute turning down, then you know that, okay, the 5-minute is going to turn down. See, always, you must understand the theory is that the lowest time frame turns first and fast. The higher time frame turns last and is more reliable. So what you should be doing is always use your assumption, or use your analysis on a higher time frame. And when you take your trade on a lower time frame, that's where you get your least risk with the most reward, right? So that's what I would suggest you, right? Okay. Do you suggest to scalp or swing? The next question is, do you suggest to scalp or swing on forex? Okay, it all depends what you want to be or where you want to be. See, if you are a scalper, okay, of course, I'll tell you it's more tiring, more tedious than if you are a short-term trader or long-term trader. But what the advantage of being a scalper and a swing trader or short-term trader is, see, your risk is very limited, and when you make you only make a nominal. When you also lose a nominal, so at least you can stay in the business. But when you are a short-term trader, chances are, the signals may not happen every day. It may happen once in 2 days, once in 3 days, or even once a week. It all depends what time frame you specifically follow, right? So, but as a result, but of course, your rewards would be more, meaning in the sense your rewards can be in the region of 1:2 or even 1:3. So it all depends what kind of character you are and what suits you. Because if you are a person, after you putting in your trade every second, you want to look at the screen, you want to see how is the market heading, then I think scalping is the best, because probably you are not maybe you're not suitable for that holding on to your position, right? So that is my suggest on you. Okay. I think I've already answered that question. Okay, the last question is, do you have a live trading room with audible commentary, and what sessions do you trade? Yeah. Okay, I do have, see, my desk is made of, I have about 5 screens, right? And we have also in-house webinar every Wednesday, right? We have every in-house webinar every Wednesday evening. Feel free to come in, okay? It is free, because we love our job, right? We would want you to be a better trader, right? So you can come, you can ask on any questions on this. We would be very glad to assist you. And we also produce reports on about 38 crosses. So which is, if any of the crosses which you're interested, is always you can come, and we'll be very glad to assist you. Okay. Okay, I think we had a very wonderful session. Okay, thank you very much for coming to this session. And we do have also on Friday 8 GMT with FX Street, right? So if you're free, feel free to come in. And also, if you want to bring in your friends, because see, the bigger the group, I think the more we can discuss, and the more we can learn as a group. Okay. And I would like to thank you again, and I will also take this opportunity to thank FX Street for organizing this event. Thank you very much, and looking forward to see you. Okay, goodbye.